What's going on, guys, and welcome to the TC Trading channel. So in today's video, we're going to be going over the public investing app, how to buy and sell, and then also the different order type options that you have that many people may not even realize they have available to them. So real quick, if you want a good overview of how to get signed up, how to get started, all that, we already have a video here on the channel in the public playlist. Head over to that video. It gives you a good brief overview of all the different features the app has to offer. This one we want to specify into the actual trading aspect and the different order types. So we're about to pull up the app on our screen, pull up public right here, and I'm about to be logged in. And what we're going to do first is we're going to look to buy a stock. So here's my free, I got my free portion of Tesla stock down 3 cents today, 0.28% from that $11 value of the portfolio, at least that we have right now. So what I want to do first here is I want to pick a stock. So let's go to the search feature and let's pick a stock that we can go and buy and use as an example here. So let's go ahead and let's find something interesting to trade. Let's go BlackBerry. At least when we're filming this video, a lot of these stocks, AMC, the BlackBerries, they're going nuts right now. So how do we buy this stock? So we have BlackBerry pulled up, tells us high risk. We talked about what it gives you, all the features in the prior video, but we want to invest in BlackBerry, okay? So if I click on invest in the bottom right of the screen, here we go. It's going to tell me this is a risky stock. If I understand that, I have to swipe to confirm. Okay, great. That's cool. I like how they have that feature there, okay? Now, I have $10 of buying power in this account, so how do I go about and do this? And for the sake of this video, let's use $5, right? Obviously, you can use this for any number, any dollar amount that you want to use. Now I can go ahead and invest $5 into BlackBerry just like that. Now, when I click on that, it's going to say I want to invest $5 in BlackBerry. It's going to place the order for approximately 0.329 shares of BlackBerry at the best available price and good until the end of the day. So I can confirm that. There I go. Now, if I want to go back and edit this, I click on the bottom left, I click edit. Now, here's where everyone may get confused, right? Because okay, great, I can invest and I can invest in fractional shares. That's what you're buying. You can pretty much invest any dollar amount that you want, that you can afford, and it's going to be in the form of fractional shares if you can't buy an entire full share of BlackBerry. Now, there's a way around that, and there's different order types. So let's dive into some of the order types. So how do I get to that? So if I click on $5, or if I don't even click on that, if I go back and I don't even have anything selected for BlackBerry, check the bottom left. See that little arrow in the bottom left? I click on that. Now I have the option to click a different amount, or if I click on the bottom left button again, those 3 dots, I'm going to get order types. That is what you want to unlock. That's a little bit more of an advanced way to go about trading or buying, but it's very, very useful. So what they're going to default to is slices, essentially the fractional shares, that top option right there. Now, I can go about that if I want to just buy X number of dollars worth of BlackBerry or any stock that I want to buy. And for most people, most longer-term investors, most people who are looking to buy companies that they want to hold for some time and they're not super concerned about the actual price they're getting in right now and their exit, their entry, and they're looking to invest in a company, dollar cost average in, that's totally fine, and that makes it so simple to do. Great. But for those who are a little more advanced, we have other options to choose from. We can click a market order, which is more of the, I guess, similar in a sense to that buying a slice, except when you click on market order, it's going to fill you at the best available price, as they say, between the bid and the ask. Most likely when you're buying the stock, it'll fill you towards the ask, and when you're selling a stock, it'll fill you towards the bid to get you in and out quickly. So you're going to get in, get out. The market's open, you're going to get in, get out. But the only problem here is that you're not going necessarily at the best fill price, and you don't have the control necessarily on that fill price. Whatever the stock is trading at the current market price, they're going to give it to you. But there's a way to get more control. That comes with the limit order. Okay, the third option down here on the list here is a limit order, so I can buy and sell a stock at a specific price or better. So what I might do here for BlackBerry is click on limit order. I can type in the number of shares that I want to buy. For example, let's say I want to buy 1 share of BlackBerry, right? What I can then do is set my limit price. So I don't want to buy BlackBerry up here, okay? I don't want to do it. I want to buy BlackBerry if it comes down to $10. So I can come in here and I can edit this to $10. So if BlackBerry comes down to $10, that is when it will buy 1 share of BlackBerry for me. And that is the power of a limit order. Now, it works the exact same way on the sell side. So as someone who's more of an active trader myself, I'm using pretty much strictly limit orders when I'm getting in and getting out, because I'm looking to get specific price points for my entries and my exits that I am looking for, right? So it's not necessarily something that I worry about for like a long-term investment. If I'm buying Tesla stock, if I'm buying Apple or Amazon, and I'm intending to hold that for years, I don't care the price I get right now, because I'm probably going to buy some more. And of course, if it comes down, I'll buy more. If it goes up, I'll probably buy some more as well if I have cash available that I want to enter or throw into that stock, right? But if you're looking to actively trade on a very short-term scale, that price point is important to you, right? And so support, resistance, trying to buy towards support, sell to resistance, that's important. And that's the power of a limit order, so you can make sure you're getting the price point you want. And you already know what you're going to get, and you know your target. So let's say I'm trying to buy BlackBerry at 10 and my target's 15. I know I'm going to make $5 per share, right? Multiply that by how many shares I'm going to trade. I already know roughly how many dollars I'm intending to make on this trade. And then obviously, if I want to have a stop loss in place or cut my loss if it drops below, maybe I'm looking to sell BlackBerry if it falls below 9. So I'm going to risk $1 to make 5 on that specific trade, if that's my intention behind it going in. So that's the power of a limit order. Now, one other thing with a limit order is that you will not get filled above that limit price for a buy or below that limit price for a sell. You're going to get that price or better, okay? Now, if the stock never comes to one of those prices of your limit order, you're not going to get filled. Understand that. So if I'm looking to buy BlackBerry at 10 and it goes to 20, 30, 40 the next couple of days, I may never get 10, right? So that's what you have to understand, right? The stock could go up and it can never come to your limit order. Or if you're looking for a target sell at 15, let's say I had shares of BlackBerry and I'm targeting 15 and it goes to $14.99, sorry, I'm not going to get filled. If it dips back down, I'm not going to get filled. So sometimes you have to be paying attention. It's not going to fill you right away, so you at least have to pay attention. If you're watching it, great, you can be able to adjust those orders. If you're not watching it, that's where the market orders come in. Get in, get out. You don't have to worry about it. Now, the last order option here is a stop order, which is actually really cool. So you can set a stop price where the stock has to get to that price in order for your order to execute. So for example, what we'll do here is we'll go into this example here on BlackBerry. I want to do 1 share. Now, my stop price I might want for BlackBerry to buy BlackBerry here, I might want it to be $20, saying, hey, I'm noticing that if BlackBerry gets over $20, that's a breakout zone. I think it's going to go crazy from there. That's a resistance. If it gets over 20, I want to buy in. So maybe I'll put it for like $20.10, just so that it confirms the breakout over $20. That's my stop price. So it's not going to buy BlackBerry under $20.10. Only when BlackBerry hits $20.10 will this order then fill me at the best available price at that current time. So if it maybe hits it quick and pulls back, I might even get an entry a little bit lower, but at least it hit that price point. My order gets triggered and it will go. And it's the same thing to the downside. So let's say a sell. I don't want to sell BlackBerry until it hits this price or lower. For example, a stop loss, right? If I'm in at BlackBerry at like $15 and I'm saying, hey, if it can't hold $10 as support, I don't want to be in. Well, then I can set a stop sell for, let's say, like $9.97, saying if BlackBerry comes below $9.97, get me out of this thing. I don't want to hold it anymore. I think it's going to come down a lot more. I can at least avoid some of that downside risk. So that's how a stop order works, and it's really cool how you can use that here. But make sure, though, again, when you're going in, I'll go back to this really quick. You click on invest on that stock, slide over to confirm if it's a risky stock. They'll tell you many stocks you're probably looking for are not going to be like that. But I can, of course, just invest any dollar amount, make it super simple. Go right ahead with that if I want to do that. But if you're looking for those order types, click that bottom left once and then again on those 3 dots, and that will allow you to go into those order types. So make sure you're taking advantage of that if you want to. Now, one more thing to note when it comes to public, their trading hours are when the market is traditionally open, that 9:30 a.m. Eastern to 4 p.m. Eastern, at least when we're filming this video. Why is that important? Well, because stuff happens in the after hours, right? From 4 a.m. all the way to 9:30 a.m. Eastern, that's pre-market. Stuff can happen. There could be news. Stocks can move. And then from that 4 p.m. all the way to 8 p.m., stocks can move as well. So make sure when it comes to those hours that you at least understand the app that you're using to trade these stocks. I would recommend, if you're using public, I would recommend this as a brokerage that you use for longer term holds, for more investments and not necessarily active short-term trades. Because if you're doing that, make sure it's during the normal trading hours. If it is not during the normal trading hours and you're trying to trade like a penny stock or like AMC or something's going nuts in the after hours where it's falling off because there's some bad news and you can't get out, that's your downside risk, and that's where I would recommend Webull, as it has the best after hours and pre-market hours access that you're going to find, so you can get in, get out during that time. Now, it's not an ad for Webull. All I'm saying is that make sure you know that when you dive in and when you put money onto a brokerage platform, because that's at least what Public offers as of right now. So appreciate you guys for tuning in. There'll be a link down below for Public. There'll be a link down below for Webull, other resources we use here on the channel all the time. I appreciate you guys for tuning in. Hit that thumbs up button, and we will see you in the next video. Peace.